it's Brad Laurie or BlockchainBrad, and on behalf of BlockVera, it is my honor to speak with David Johnson today. He is someone who is well known and well versed when it comes to all things blockchain and cryptocurrency. He has a lot of experience when it comes to protocols themselves. So, David, thank you very much for your time today.
Yeah, it's great to be here, Brad. Appreciate you taking the time to do the interview.
No worries, mate. Now, for those who are wondering, this is entirely free. It's all about education and information. And today we're speaking specifically about a startup called PegNet. Now, Dave, as I mentioned before, you're very much well versed when it comes to protocols, when it comes to decentralized endeavors. Tell us a bit about yourself, mate, before we start, about what you stand for when it comes to the ideals and the vision of
Hmm.
blockchain.
So I was lucky to hear about Bitcoin back in 2012. And when my friend finished explaining it to me, I sort of said, wait, you're saying there's a non-governmental currency that can never be manipulated by politicians and is controlled by math? Yeah, I think I'd like to, turn all my green pieces of paper into that, right? And it sort of set me down on this road of going down the rabbit hole of blockchain. Ended up starting the first angel investment group in the space, Bit Angels, in 2013, and so got exposure to a lot of the early protocols, the early days of Ethereum and other projects that were just coming online in 2014. So yeah, it's been an amazing time, and really the ideals that drive me are honesty. I see blockchains and cryptocurrency more generally as an honest ledger, right? There's so much manipulation we see in the financial system that's done by the Federal Reserve and others, sort of pulling levers in the back room that change an interest rate here, or dump in a few $100 billion there. I mean, it's just something that doesn't sit well with me from a fundamental perspective. And so I love the idea of a transparent ledger where everybody can see what's going on, have confidence about how many units are in the system, that nobody has some advantage, right? Everybody had to put value in order to participate. And I really love that. And so since 2012, I've been pretty much all blockchain. I now run a family office. We only invest in blockchain and crypto, and we've made about 40 investments across the ecosystem those last 6 years. So yeah, it's been
Wow.
really fun to see it all evolve, and here we are today.
Wow, and look at you, 40 investments later, obviously a huge proponent of the potentials of this, whether that be for business, whether that be for, foundations, and even for the open source nature of this. Now, it's interesting you mentioned something as well, David, with regard to manipulation in mainstream money markets, because things as they've played out in crypto haven't all been clean either. We've certainly
Mm,
seen some very questionable conduct. So that's why I really wanted to talk to you today, because going back to what you stand for today, being PegNet, one thing that impressed me was no IEO, no ICO, no pre-mines,
yep.
the hardcore, genuine decentralization as a motive. So talk us through that for a moment. Talk us through how important those things are to you as you really push forward for a new paradigm, and especially when it comes to money.
Sure. No, that's a great point. And You know, for me, a lot of people know me from coining the term dApps, or decentralized applications, in 2013. And sort of the tenets that I put forth to define that were: it had to be open source, it had to be peer to peer, it had to have a blockchain backend, and I had to have a token to really drive the economics and reward behavior in a system, right? And sort of using those fundamentals, it's been amazing to see all the things people have built. And to your point, I think it's best when it sort of sticks to those principles, right? And things in 2017 kind of got away from that, right? It wasn't about the blockchain, it wasn't about peer-to-peer networks, it was about fundraising lots of money.
Hmm.
And so it's cool to see developers sort of returning to the foundations and saying, okay, what made this so special is anybody could participate, right? The permissionless nature of these projects. And so, you know, toss out the ICO, toss out the token sale, let's just do mining. And with PegNet, they were smart to pick an algorithm that works really well for CPUs. So you don't need ASICs, you don't need a GPU, you could just have commodity hardware, a laptop, a desktop, and you can participate in the network. And so when they launched mining August 19th, we saw this huge rush of people to participate in the system, hundreds of miners. Like, we were expecting a few dozen nerds like us, but hundreds of people showed up even in the first few days, and now it's grown to the equivalent of about 75,000 computers on the network. So the hash rate has increased 200 times in
Wow.
the last 90 days. It's just been incredible to watch, but there's no friction, right? There's nothing to sign up for. You don't have to, get special permission, from a federated server or something to participate. It's just anybody can participate. So it's been amazing to sort of go back to those fundamentals and kind of relive some of what it was like back in 2011, 2012 in the Bitcoin world, whereas it's sort of just this permissionless network and anybody can add value and participate. So I really like that about the PegNet, and sort of it extends to everything that the developers have built there. It's about building decentralized stablecoins, for example, and not relying on a central party that's holding a reserve of value and claiming that they have as many tokens as they have in the reserve, right? There's been
Exactly.
all sorts of problems with that.
Right, and Dave, sorry to interrupt, but I do really want to focus on,
Sure.
the full and holistic nature of PegNet. So we're going to dive deep. So don't worry, I'm not going to miss anything. But on the
Great.
note you mentioned, because you are one of the founding fathers of the D app, as you put it, you certainly, were well and truly connected to Vitalik at the time. You're very deeply involved in blockchain and even in the innovation and the literature. And so we're talking about, I'm speaking with someone, essentially as blockchain royalty, to put it bluntly.
You're too kind. You're too kind.
But beyond that, mate, honestly, one of the things I think a lot of people are appreciating right now is what you're saying about redressing some of those issues we've seen that have emerged and bringing it back, because honestly, that was the thing that attracted so many cypherpunks to this space. It was what made this space potentially beautiful, because it was really in the spirit of truly changing the game, creating decentralized money from the outset. And now PegNet is doing something even beyond that and challenging the idea of money itself across the globe, and bringing it to literally to a new paradigm with this idea of stablecoins, especially the way you've designed it. So let's talk about that. Now, you claim to have a network of stablecoins designed, not even claim, but you've proven you do. And it's certainly designed in the spirit of DeFi, of decentralized finance. But talk us through exactly what it means to have this network and also your native token and where it fits into it.
Sure. So there are 30 pegged assets on the network. There's 14 of the largest fiat currencies in the world, 14 of the big cryptocurrencies, and also gold and silver. So you have sort of different categories of assets, but they're all convertible inside of the PegNet, which is sort of the big advantage of this system. Is a lot of people are using stable coins as a means of hedging, right? If there's a bear market coming, people want to convert, let's say, their pegged ether into a pegged gold, and then as soon as they feel bullish again, they want to be able to convert back in, right? Without going back to the legacy financial system, without paying a bunch of fees or having to sell something on an exchange. And so PegNet allows you to do that, but not just with the dollar, but with all of these major currencies. That's one of the major limitations of the reserve structure that most stablecoins use today, is you can't have an Indian rupee stablecoin because you'd have to have a bank account full of rupees, and they're not allowing those financial connections. So PegNet instead uses the miners as oracles, and they're reporting the prices on those 30 assets every 10 minutes. So think about it like you're getting the average price over that 10-minute period for the price of gold or price of dollars. And this also solves sort of all the needs to have a counterparty, because PegNet, you're within your own wallet. You're not dealing with anybody else. You're not sending a transaction out. You're not trading with somebody else on an order book. It's all your value inside your own wallet. And you're saying, I want to do that hedging. I'm just going to reference that decentralized oracle in order to do it. So that's something pretty unique that we haven't seen before. To answer your question about the native token, so PEG are awarded to the miners and is used in arbitrage in the system. So there are 5,000 PEG rewarded every block to the miners, and 5,000 PEG available to the arbitrageurs for conversions. And so there's this predictable supply of 10,000 PEG available every block, and it's every 10 minutes. So that is sort of the base functions of what Peg does. It allows you to sort of get into pegged assets in the system, and that's its core function.
Right, and my apologies for my dog in the background, but we'll just
No
labour
worries.
through this. Now, what was interesting, I heard you speak about this, having this predictable structure has only recently been finalised in terms of that, the block rewards and all of the details there. Now, what's
Sure.
interesting also is this native token has real utility from the research I've done because of the mining. So can you talk us through this imperative of utility connected with your native token for the whole network to operate productively and efficiently?
Sure. Well, because you're using oracles to set the prices of the pegged assets, how do you know the oracle is true? Well, the good old-fashioned way to do it is proof of work. It's sort of amazing to me that it's still 2019 and we're going back to proof of work. There have proved to be a lot of edge cases and complexity around a proof of stake. There's some potential solutions there, but the PegNet developers decided, let's just keep it simple, and people have to submit hash power with all of the prices that they submit, right? So nobody can just submit prices without using real hardware and real energy and effort to submit those to the network. So first, all of the prices submitted are graded by that hash power, right? Have you proven to be a good actor that's adding value to secure these prices for the systems? And if you make it through that sort, okay, here are the top 25 miners, then they're all graded by how close they are to that median price. So you have to both provide good data, but also accurate data. So the closer you are to that average, the more likely you are to be included in those top 25 miners. So PegNet actually rewards the top 25 miners every block. So unlike Bitcoin, it's not a single winner for every block. It's sort of distributed pretty widely to a large set of miners that are participating in the system. So that's sort of the core function, is how do we reward people for submitting honest prices? And that equals the security of the system, right? The more computers we have securing the network, the more confidence that I can have that these prices are correct, and that somebody trying to mess with the system would have to use an extraordinary amount of computation and electricity and effort to do so.
Right, and it's interesting, Dave, you mentioned electricity, because one of the things that I like about your model with the mining is that it's significantly less in terms of computational, requisites, in terms of energy consumption, I mean. So
Sure.
90% less. So in light of all the things we've seen emerge with the controversy of Bitcoin being, even with all of the innovations with renewable energies, it's a big difference to,
Sure.
that issue.
Yeah, the LXR hash that's used by PegNet is mostly memory bound. So do you have at least 2 gigabytes of memory connected to the computer you're doing the mining with? And so it doesn't take a lot of energy. It consumes maybe 10% of what your CPU is doing idly in the background anyway. We put some electric meters on a few of the miners, and it was like 10 to 30 watts. I mean, you're talking less electricity than it takes to run a light bulb in the same room in order to run the miner on that computer. And so, yeah, I really like that aspect too, because what we want is a reliable proof. But if that doesn't have to consume a lot of energy, then why would we opt for that? So
Right.
opting for a memory bound or RAM bound type of approach, I think it was a really smart decision, because why consume the electricity if we don't have to? And so it sort of shifts to how many computers do you have with that RAM, and that's something that's not easy to parallelize or make
Right.
a parallel process.
And Dave, what's interesting too is that by having this RAM hash approach, as you mentioned, is that it means that more people can access this because it is CPU driven, and makes it more equitable for people. And I think a lot of people wanted that with the way that Bitcoin moved. It became more about pools and more about power. So you're addressing that issue as well and reducing the risks of monopolies, especially when it comes to mining.
Yeah, no, I think that's important. I mean, I got into Bitcoin in 2012, and I was just a little too late to really get into the mining. GPU farms were already a thing. ASICs were coming on the horizon, and so for me, it was just easier to buy some Bitcoin. But I love the idea of returning to sort of that ideal where anybody can participate with the hardware they already have. They don't even have to buy something new. They can get access to this just with the hardware they already have. I think that's the ideal. I mean, if you look at the old days of Bitcoin, back before even the software was hosted on GitHub, it had been downloaded a few million times. And
Mm.
it built this huge organic base of people that sort of had experimented with it, gotten to know the technology, and sort of as it gained traction, it had this real massive community of people that sort of understood it at a basic level. And it was sort of too bad when we lost a lot of that as it became very industrialized. And so, we'll see whether the hash can sort of maintain its non-ASICized sort of existence. But even if it remains unoptimized for a year, a few years, I think that's an important phase to sort of build this community where anybody can access it. And one of the developers that I was talking to pointed out, if anybody does manage to do a better parallel process between computation and RAM, it's actually broadly applicable to all of computer science. So if we end up having a breakthrough there, that would actually be useful for everybody, as opposed to the optimization in SHA-256 is just sort of doing this one little calculation again and again and again, faster and faster, and that doesn't really benefit sort of the broader world of people using computers.
Right, and obviously that's the direction you're taking this as well, because we're talking about the native token, but if we expand that a bit, like Bitcoin has with their little b, big B analogy, you're also building, the big P or the big PegNet as well. And let's talk about that in light of the whole network now that you have a vision for, and as you mentioned, have a significant amount of assets already established in this. So, referencing, for example, the likes of Bitcoin and Ethereum, you're certainly supportive of those networks as well and those technologies. So, how does it all fit in with that respect?
So the way that PegNet is built is it's using the FACTOM technology, which anchors into both Bitcoin and Ethereum every 10 minutes. So you can think of it like it's using all of the hash power and security from these large public networks. It's using the digital identity and the Oracle immutability characteristics of Factom for securing all this data. It's published on the Factom chain, which today secures billions of records from around the world. Chain's been around since 2015, so very well established. And you can think of PegNet as a DApp on top of that tech stack, right?
Mm-hmm.
So that's part of why PegNet's been able to move so quickly. It didn't take years to build this. It's been built largely in the last 4 to 6 months. And it's because the miners aren't doing consensus. They're not ordering transactions. They're not doing all of those steps. That's already handled by the Factom and Bitcoin and Ethereum layers below it. All they have to do is publish that data. The miners are just publishing that data, and the existing blockchains handle all the transactions, the consensus, and all of those steps. So from a holistic perspective, PegNet has sort of benefited from building on these other technology stacks who had already sort of paved the way the last 3 or 4 years.
Right, and I heard you explain this recently with regard to the layering, and you referenced in one breath the idea of PegNet being, a layered solution, in this respect, a layer 2 solution. So in that respect, Ethereum, in many respects, would have been one that would function as a layer 1, but also the Factom protocol. So I just want to understand a little bit more about that with regard to the different consensus and structures, obviously with proof of authority, for example, with Factom, and how important they are for scalability, because obviously you need substantial scalability for the future and security as well. So building upon the strengths of these kinds of protocols is going to be important for your success. So what made you obviously focus on these protocols? Is it because of your background with Factom, or was it because of something else?
It's partly because of the familiarity with those protocols. If you wanted a protocol that could handle a lot of scale and that could do it at a very low cost, a tenth of a penny to publish entries on Factom is pretty competitive. If you look at the per transaction cost for Ethereum, 5 cents, 15 cents, depends on how busy the network is. It can get 30, 40 cents. Bitcoin, even the fees can tend to be $1, more than $1, depending on how busy the network is. And so what you want to leverage Bitcoin and Ethereum for is their massive proof of work and their extremely high level of security.
Mhm.
So by just placing those Merkle roots, those transactions once every 10 minutes into these large public blockchains, you're inheriting the security of that state of the network by doing that, right? So that is really about securing the security of the long-term security of the network. Now, at the Factom layer, it's handling all those conversions, transactions, sends between addresses. All of that had already been established. And if you look at the history of Factom, people have been securing immutable oracles on it since 2016. I remember standing on stage in Tokyo with Sergey from the Smart Contracts group, and we launched one of the first implementations where you could trigger an Ethereum smart contract using data published in Factom, right? And I'm a big proponent of this in general, is people really have to think about blockchains as tech stacks.
Mhm.
There's not going to be one protocol that can serve all use cases. We don't see that with programming languages. We don't see that anywhere else in technology, in databases. All of these things specialize. So I'm a big proponent of using things for what they do best. Ethereum is wonderful for tokenization, for exchange, for smart contracts. Factom is very strong for immutable data, for these Merkle tree structures, these very low cost, efficient ways of securing information and doing digital identity. Those are very different use cases. So, I think the landscape that we're going to see going forward is people leveraging more and more combinations of tools to do these type of things going forward. So
Right.
that's sort of really what drove the interest. And the developers in the PegNet community are largely from either the Ethereum community or the Factom community. So that's where we see a lot of the DeFi applications, and I think it's for a reason.
Absolutely, and it does seem that Factom is a specialist protocol for the use case that you're putting forward and you're literally building. And again, you've mentioned even the cross-chain potential in the future, and opening up the prospects of working with other chains as well. And I
Sure.
imagine that will be coming, especially with the connections that you have. But let's talk a little bit more about the decentralized IDs, for example. How important is that, to build this in, and what's the crux of this for as you build your technology for the future?
So when it comes to decentralized identity, I think this is sort of an underestimated part of the blockchain ecosystem. Um, it's not extremely valuable to be able to run a smart contract if I can't prove who my counterparties are, right? Who's involved in the process. And so Factom spent a lot of time on decentralized identity and sort of adopted a lot of the WC3 standards
Mhm.
that have been published recently. I think they're on the official WC3 website now, as sort of check marking all of the things that you'd expect of a modern identity system. So I think that's where things are moving, because we have to couple these decentralized smart contracts with decentralized identity to make them a lot more powerful. In the context of PegNet, the digital identities can be used in a lot of ways. The fortunate thing about a user of PegNet is they don't have to interact with another party, but they do want to know the reputation and check the identity of a lot of the systems and software that they're using. So you can create a digital identity for particular implementation of a software, you can sign it, and you can prove that that's the version that you expect to be using. So I think that's important as this develops, is we shouldn't fall back into sort of government issued identities. We really need to move into sort of modern digital identities.
Right, and we see the likes of, for example, Ontology. They were doing a lot of research in DIDs as well. And
Yeah.
it's interesting also with regard to oracles. I want to touch on that with you, and hopefully you can explicate a bit more about this. But
Mhm.
basically, with regard to oracles, we see now tokenized models emerge.
Mhm.
We see, startups where they specifically are oracles, but they have a token attached to them, which is in some respects anomalous. I don't know if you agree with that or not, but many would argue in the tech
Mhm.
sphere that sometimes you don't need a token attached to the oracle itself. So in your context, because you're a broader network and because underpinning that is the essential aspect of oracles, what are your thoughts on these things you see emerging in the space?
I think incentivization is important if you want it to be really decentralized. Right, without a token, what you're saying is that somebody else will pay for it. Somebody is cutting a check somewhere and is going to control the process. What tokenization really is the brilliance of Satoshi is that the first time ever, the software could pay for the hardware. Like you gave a checkbook, you gave a wallet to the software itself and said, pay for this mechanism, pay for this behavior, right? And so all of a sudden, there wasn't an intermediary sitting in the middle that was paying for that server. It was literally the software itself. So that's the key insight that I think made Satoshi's system with Bitcoin successful is every version of e-money that came before, there was some trusted party that had to pay for it.
Mm.
And so by giving people a decentralized reward, a permissionless reward for securing the network, the network really took off. And so with PegNet, it's the same thing. Yes, somebody, some trusted entity could publish an Oracle price and we could all believe that that's the correct Oracle price.
Mm-hmm.
But I would propose to you that that's a much more fragile system than what we've added it up with. So instead, the miners can pick any data source they want and pull an API from CoinMarketCap or CoinCap.io or Forex prices or whatever. And if any Oracle has a problem, I can say, oh, that's stale data. I'm going to flip to my next preferred data source and go with that. And so you have all these different miners making different decisions about where to access that information. And then you're aggregating that together and grading it toward that average or median price. I think that's a much more robust system. It's also much less vulnerable to hacks. There's not a central party that if they go down, everybody goes down.
Right. So obviously oracles are really important, Dave, but it was more about, inquiring about the nature of tokens that we see emerge with oracles now, in the sense that there's been some questionable price movement, price appreciation of some of these oracles that we have seen in the marketplace now. So that's why I'm asking this, because obviously with no pre-mine, no IEO, no ICO, you're in a very different category, but it always does concern me when price appreciation doesn't necessarily correlate with the tech.
Well, at least in the case of PegNet, it's pretty directly correlated to, is it useful, right? The core value of PegNet is the ability to peg these different tokens to these different values because you're moving away from the reserve model. You're moving away from the collateralization model, something like MakerDAO, and you're really relying on these Oracle prices to be correct. And if they're not, the system isn't going to function. Mm. And so, as much as people see the oracles and the proof of work used to secure them as a valid way of securing that information and ensuring that these conversions are correct, that's going to directly correlate to how much value people are willing to put into the system, right? And I would say, the system's not ready to secure billions of dollars of value because there isn't that level of security yet when it comes to the oracles. And so it needs to be this organic cycle where we see an increase in mining, which we have, right, to over 1 billion hash per second. And so now I feel pretty good. All right, there's a lot of people securing this network. Now people have felt they can secure $11 million of value in the network. That's the amount of assets that have moved in so far, right? So, okay, and hopefully this starts this virtuous cycle. Oh, wow, there's been this increase in assets in the network. There's been this appreciation in the PEG token. That increase in the incentive for miners to put more hash power onto the network. So, looks like we're getting close to 1.5, maybe soon we'll break 2 billion hash per second. And that gives you more confidence about the security, right? I mean, that's sort of what we saw in the early days of Bitcoin is, people are like, why would I send $1 million over a network, that is being secured by just a small number of computers? But as the hash power got bigger and bigger, all of a sudden they had more and more confidence. Okay, nobody's going to mess with this thing. It's got thousands of computers. It's got millions and millions of dollars of hardware securing it. So we need to go through that same kind of evolution with PegNet. But so far so good. It seems to be on that trajectory where value increase leads to more security, which leads to more value increase.
Right, and like you said, I mean, you're underpinning everything is the native token, and the oracle's built into this, so you're not defined by the oracle itself. And what's interesting also, you know, as you're building this out, this is just the beginning for you, Dave, as well. You haven't really been out in the open, in the wild, as we know it, for that long. So how long has it been since you've been active, you know, as a token and accessible to as an open source technology?
Well, the coders were contributing to the open source in July and August. The mining went live August 19th and sort of went through this bootstrapping phase where we wanted to see enough security move on to the network before they started conversions in the system. Conversions went live October 14th. So I was at DevCon and we, you know, tried to make a little announcement. Hey, you know, the system's going live, and the first few $100,000 of assets moved into the system, which is great to see. And then just recently, on December 9th, I believe, the arbitrage went live. So the price of PEG went free floating, sort of all the upgrades around a stable and predictable supply of PEG. All of those upgrades were finished, and you could really start arbitraging in the system to start closing those prices between external exchanges and internal reference prices for PegNet. So those are really the three big things we needed. You needed the mining to go live, conversions, and then arbitrage. So all of that now has officially been delivered. But yeah, I mean, it's December 16th, so the arbitrage has been live for 7 days. So it's definitely early days.
Yeah, and that's why I mentioned it, because as I was saying to you pre-interview, there are very few projects that really get me interested this quickly. And, you know, having researched this, you know, for a few days now, but really focused on today, this one, because of the fact these things have all merged together, and already we've seen the evidence empirically of interest from not just devs, but those who want to experiment with the potential of this, with the arbitrage now built in, it's a big deal. Obviously, it's going to be exciting later in the interview talking about your roadmap, because there's a lot built in there. But in terms of just going back to the protocol for a second, I want to talk about some of the anchors that you built in as well. That's why I was referencing Bitcoin and Ethereum before, because you explain this, you know, very clearly in your talks that are also available online. So how important is going back to Bitcoin and Ethereum in terms of being anchors to support what you're trying to build?
I think it's very important for the general ecosystem, especially people that aren't necessarily as deep into crypto as we are. A lot of times what they know is Bitcoin and Ethereum, right? They're by far the two largest brands in the ecosystem. And often, I don't get this question as much as I used to, but in 2015, 2016, you know, I'd be talking to an enterprise guy and he said, yeah, but what happens when Bitcoin goes away? And one of the ways you can answer that, you know, sort of without arguing a lot about, well, Bitcoin's not going to go away, is to say, well, if that happens, we're agnostic. It's also anchored into Ethereum. It can also be anchored into other chains. If anything else becomes popular, we can anchor into that. And sort of they get enough redundancy because it's the same anchors, right? They're just validating the same thing. You've got all these redundant anchors in these different chains. At some point, it's like, well, look, if like the internet would have to go down for this to stop working. And hey, if the internet goes down, we've got bigger problems than the validity of this particular blockchain, right? So you can sort of address people's concerns, and being agnostic and supporting multiple chains was a strategy, you know, working with the Factom team that sort of always addressed those issues.
Yeah, and it's very clever because a lot of people don't realize, I think, that Factom can function in that way, where it can interoperate and it can be agnostic, you know, and also facilitate PegNet, you know, on top of that. So it's a big deal for the future as we see new scalable layer ones potentially coming out that are even more, you know, technologically focused or capable and have the capacity for greater scaling, you know, and not compromise security in that respect as well. So clearly, you'll be watching some of these that are emerging in the next years and looking to perhaps, you know, collaborate with them as well. But what about DeFi? This is an interesting one because we see the likes of Ethereum doing exceptionally well when it comes to the narrative and also onboarding immense amount of developers. But it's not just Ethereum that's doing DeFi.
It's true. There's a lot of cool projects going on. I would say they have the majority from what I've seen of DeFi projects, partly because a lot of the DeFi relies on smart contracts. But to reduce complexity rather than using a smart contract approach, PegNet really sort of approached DeFi from an angle of how do we use these oracles and keep it simple where a person doesn't have to interact with another party. So it's definitely opening up sort of a new venue of DeFi. A lot of DeFi has been about give me an interest rate for providing some capital, a la something like Compound, right?
Mm.
Which is great. But there's also a need for decentralized finance when it comes to stable coins and synthetic assets that represent a certain price on a public market. And so I think what PegNet can bring is sort of an expansion of that DeFi vision, something that works on Ethereum but can also be interoperable with other chains.
Right, exactly. Now, just to reiterate, as we talked about before, I want to make sure we're really crystal clear on this. So no
Mhm.
pre-mine, no founder rewards, which we hadn't talked about before, definitely no ICO, no IEO, and no airdrop. So these, you really are standing by the ideas and the ideals of decentralization by having that designed. But I also wanted to find a bit more about the relationship between Factom, because there's a burning model built in as well with the FCT token. And there's also asset conversion, and then obviously miner rewards. There's the three key utilities offered. So can you tell us a bit more about that relationship with that token?
Sure. So given that PegNet is a dApp built on the Factom blockchain, it's aware of actions taken on Factom, whereas it's not aware of burns taking place on some other protocol, right?
Mm-hmm.
Where you're not running a Factom node specifically gives you the ability to see, okay, yes, I can see that burn took place. This is sort of the core of, okay, how do we prove that values moved into the system? And how do we keep it all on chain so it's 100% auditable? Oh, all right. Well, the nice thing is Factom has had this function for years. You've always been able to take a factoid, and it's just the software license in the system, and convert it into entry credits,
Mm-hmm.
which are what you use to write data into the chain. And this two-token system is pretty unique. Factom sort of pioneered this idea of the entry credit is non-transferable. It's assigned to one address. It can never leave that address. It doesn't have any monetary value outside of writing data to the Factom chain. And it's always been pegged to a tenth of a penny.
Mm-hmm.
So it looks at the price of factoids in the market, says, okay, the conversion rate is about a tenth of a penny. So this is sort of a natural extension of the capability that the Factom chain had already pioneered, but now extending that to dollars and euros and yen and yuan and all these other tokens by referencing those Oracle prices, not just for entry credit pricing. And so this is sort of a natural extension of something that they had already really tested well and expanded all of the edge cases and explored all the edge cases of what was going on there. So by leaning on that work, it probably saved the project a year worth
Mm-hmm.
of time to sort of inherit all of those capabilities. So as you said, somebody can take factoids, they can convert them into pegged factoids on the
Mm-hmm.
PegNet, and they can convert those pegged factoids into any other pAsset. So they can take $1,000 of factoids and end up with $1,000 of peg gold, right? And that's one of the entryways into the system. The other one, of course, is taking peg and doing those conversions in. So you have a way for miners and you have a way for people providing capital to get into the system. And I think you really need both. Is a way for somebody that already has crypto value that can prove they added it to the system, or a person that mines it, directly with hash power and add that to the system. Either way.
Right. Yeah, and what's interesting also is you're introducing, as you said, that P aspect, and I want to try and understand that more in the context of synthetics, because we hear that word brought up quite a lot. But there's also the token itself, the pegged asset token, that's specific to the overall network you've built, and you've built in three categories for this: fiat, crypto, and then precious metals with commodities. So, how many in that whole in that scope of assets, covering those different classifications, have you got available now? And do you also see this really expanding in the future?
Sure. PegNet is agnostic, really. Anything with 2 or 3 data sources that are publicly available. The asset has to be worth at least $100 million in market cap and requires at least $5 million in daily trading volume. So it's really large public assets that it's best suited for.
Hmm.
Today, there are 14 fiat currencies. I don't know if I can name them all off the top of my head, but dollar, euro, yen, yuan, Hong Kong dollar, Singapore dollar, Brazilian real, Indian rupee, Philippine peso, et
Well,
cetera, et cetera.
I'll put the list down below in the description because it's a lot. I wrote them all out. Yeah, but I was really amazed how many you did have already on the books
Sure.
for that. So, kudos to you and your team for establishing that. Now, with crypto, you also have a very long list, almost similar in terms of
Mhm.
size.
Yeah, Bitcoin, Ethereum, Bitcoin Cash, Dash, Ravencoin, Cardano, et cetera, et cetera. We tried to add a lot of the best available projects, and I fully expect that more will get added because there's additional cryptos, additional fiat that meet those criteria. Maybe we didn't have the data sources available for them all during the launch, but I've announced sort of this idea or written about it in an article of PegNet improvement proposals, PIPs.
Mhm.
And people have sort of taken that and run with it, and they're making all sorts of suggestions for how we can improve the protocol.
Right, and that's what's exciting as well, and that also goes in line with the idea of leapfrogging from what we first saw with stablecoins emerging. You're now bringing it into a network. So I wanted to try and understand a bit more, as I said, about that P aspect. It means a
Mhm.
lot because creating this, what I've called in my notes, is a bridge, copy of many assets or an
Mhm.
oracleized, asset as such, where you're bringing together mainstream assets we've known and loved, like gold and silver and other currencies, perhaps not
Sure.
love, let's say, I'll retract that, but we know very well and we're familiar with. And then
Yep.
you're adding the P to those as well as these cryptos. So what does that P mean specifically when it comes to the real value add that your network brings to make it all work together in one seamless process of conversion?
Sure. So P is just short for pegged, and so what we refer to as a P asset, is pegged gold or pegged silver, and we just shortened it in the abbreviations for the tickers to P gold or P silver. And what it really means is that all of those assets are interoperable on the PegNet for conversion 1-to-1.
Mhm.
So if you have $1,500 of pegged gold and you want to convert it 1-to-1 into pegged Ethereum, then it's a push of a button in your wallet and you can flip them from one to the other. The protocol looks at the price at the time and gives you credit exactly for that transition from gold to pegged Ethereum. And so this is amazing in the sense that you don't have to deposit it on an exchange. You don't have to find somebody else to trade with. You can just do these conversions within your own wallet without taking any external risk. And that's also a big savings on fees. A lot of wallets will charge 1/4%, 0.5%. An exchange will often charge that as that or more for exchanging assets. And here, you don't incur any of that. To publish that conversion on a Factom chain is a tenth of a penny. Whether you're converting a buck or $1,000,000, the protocol doesn't care.
Okay.
And so that's very freeing for anybody who wants to enter the ecosystem that doesn't have a lot of money. I mean, I think about myself when I started trading stocks when I was a kid, it's because E-Trade came out. And all of a sudden, I had access to $10 trades instead of paying some broker $100 or $200 a trade, right? I didn't have the money for that, right? So, I remember those days of sort of online trading first came out. It opened that whole world to people who had never had access to stock trading before. And so I see this in a similar lens where we're opening up financial tools at a tenth of a penny that people haven't had access to before, maybe based on where they live or the fact that they don't have thousands of dollars. I wrote up a little article called it Ready Trader One, and I noticed that somebody had been experimenting with small trades on the PegNet, just moving back and forth $10 into this asset or that asset.
To see how much it will cost them, probably.
Maybe, but it was interesting. I looked at the numbers throughout the day, and they had done 144 trades, so one every block. They moved it around, and they had spent 14 cents, right?
Wow.
At just a few pennies to move around that value, and the price moved in their favor that day, and they made a few bucks, right? Or 50 cents or a dollar, whatever it was, and
Mhm.
that was a cool proof, because if they had done that same thing on a centralized exchange, their fees would have been $10 for the day, and they would have lost money.
Mm.
But on the PegNet, they spent a few pennies and they made money. And so that person was probably experimenting with the system, but it sort of opened my eyes to, oh, wow, the bar just got lowered from I need this many thousands of dollars before the fees are marginal to I need a couple of bucks before the
Mm.
fees are marginal. That kind of reminded me of where I came from. And so that was pretty cool.
It is very cool because obviously people want to save a buck and make a buck. Obviously, we've seen that with the likes of store of value narratives with Bitcoin.
Sure.
But what is interesting, though, harping back to that pegged P, is that there is this idea, though, that they become new assets, asserted as
Mm.
such, because you're creating literally that P addition. So how important is it to have it separate and distinct, even though it does replicate and represent some other asset?
I think it's important because you need to distinguish from the native asset. These are synthetic assets. They're not the native asset, and so they do have different characteristics, right? So, for example, I couldn't take a pegged factoid and convert it into entry credits, right? The Factom chain is not aware of the dApps that are operating on top of it, so I
Right.
couldn't use my peg factoids. I can get the economic exposure of the price of factoids, but I can't use it as part of its original utility. So there is some differentiation, and it's, I think, important for consumers to avoid any confusion, to have a different ticker, and to differentiate what they are. And that's true of a lot of the assets. I can't think of any special advantages for fiats. Maybe you get some small interest rate if you deposit it on a traditional bank account. Maybe that's a difference. But so staking is something that's proposed but not implemented on PegNet. So if you're hoping to get the original staking benefit, then you may want to hold the original tokens. So it depends on the use case, and I think it's important to draw that distinction. So just to avoid any confusion.
I agree. And what's interesting, just to go back to staking, because I think it's important given that there are synthetics that have emerged using staking models.
Mhm.
Sometimes we've seen already that the token velocity, doesn't necessarily correlate. And there's some questions about the effects of staking, because perhaps sometimes it's the staking itself, whilst it may be securing a network, is also by form and function acting a bit like, a saving system or removing things away
Mm.
from circulating supply. And the more that happens, we see spikes in price that perhaps aren't sustainable. So I like the way you're going back to that proof of work, because really, as you mentioned, those three drivers are very much utility bound. And it's all
Mhm.
about trying to make sure that the ecosystem grows. So let's go there. Let's discuss the mineable aspect of this a little bit more, so we can better understand what motivates a miner, what the rewards specifically are,
Mhm.
and how do you sustain mining interest long term as well, given that it is CPU driven?
Sure. So specifically, there are 5,000 peg rewarded to miners every 10 minutes with each block. Because there are 25 winners of each block, each of those individual miners are getting 200 peg provided to their address. Peg, it's fairly cheap at the moment. It's half a penny, I think, is what it's trading for. And so it's a small reward, but it's handed out 144 times a day
Mhm.
on a regular basis, and people can compete for that reward and use it to cover costs, especially if they're using just hardware that they already have. It may not be much of a marginal cost to run it on their existing machine. The running's in the background, and they may not even notice it's there, right? So I think for a lot of people, they want to experiment with the technology and secure the network and earn some tokens in the process. That's a cool proposition. I think about it sort of like I used to run SETI at home or Folding at home, some of these charity type distributed computation platforms where you want to help cure cancer with protein, folding at home, like certainly something everybody wants, right?
Right.
And so that's I think a good analogy is what we can bring this ecosystem to. In fact, I don't think it'll be long before we see people running charity instances of PegNet, and you could mine and donate that directly as Peg dollars or something to a charity, which I think would be really cool, especially if you're not using your spare RAM or computation on your computer. Why not, help the Red Cross or whatever your favorite charity is.
I think it's such a cool idea, and even for teaching, there's the potential
Yep.
for students, to be supported around the world with resources. It's immense, potential there. But, again, harping back to access, how are you going to spread the word? How are you getting the word out right now, Dave, about, firstly, the ease of this? It's seamless
Sure.
in terms of the CPU. And how do people easily access the mining aspect, how they become a miner?
Sure. So, because there's no foundation, people are just evangelizing it on an individual basis, right? I have no official title with PegNet. I've been mining it. I've been trying to explain it to people. So there's a lot of people interested. So we're holding AMAs and doing interviews and stuff like that. It sort of reminds me of the early days of Bitcoin, right?
It
Before there was a
really does.
foundation. Before there was a foundation, it was just people excited about it and talking about something they were passionate about. As far as getting involved in the mining, for a lot of people, they probably just want to join a pool. I funded, for example, the first open source mining pool called prosperpool.io, and people can log in there. They don't need a lot of technical skill. They don't have to submit the Oracle prices. They don't have to understand entry credits and sort of some of the technical detail. They could
Okay.
just download it on their computer, point the hash power towards the pool that they want to support, and go from there. So it really lowers the barrier for people to use a pool. Some people are critical of pools because, okay, it's concentrated it into these dozen groups that
Well,
are
I've seen
focused
what's
on it.
happened. That's why.
Sure, and but I think there's something to be said for specialization that
Mhm.
lowers the bar for more and more people to participate, right? And so I think that's something that makes it easier for people to get involved. I know there's a couple of graphical user interfaces, basically graphical web wallets that people will be able to use. I think one's getting tested and maybe released today.
Mhm.
So I think that'll lower the bar. You don't have to know command line interfaces to get involved. You just be able to directly use it on the web. So those kind of tools, as they come out one by one, are making it easier.
I love it. And I love the fact you're also catering for the non-techie as well with these pools. But like I alluded to, only going on the past, with pools, we have seen inherent risks in, monopolies even emerging, or they sort of transition into more tech-focused pools as well.
Mm.
So how are you going to, because there's no foundation and there's no governance really of this whole, unfolding, how do you see this playing out? Because you obviously want to cater for the non-techie.
Sure. Well, I mean, that's part of why I wanted the pool that I donated to a few developers to build to be open source.
Hmm.
And so that's, I think, what removes a lot of the barriers. A lot of times pools are proprietary.
Right.
A lot of the big mining pools, they've built a lot of hard software and they want to get paid for it. And I understand that. But, I wanted something that anybody could use. And so within a week or two of releasing the open source, we saw people had copied it and were running pools all over the world that we had no idea about and weren't involved in. But that was the whole idea is
Mm.
we get this organic community where people could do it themselves and you sort of break up some of that monopolistic approach. So I wanted to see that really early on. And so I think the majority of the hash rate now is all on these open source pools. So far, they've been competing very well with any proprietary pools that have been on the scene. And I don't begrudge the proprietary people wanting to build cool interfaces and do, there's a lot of real work that goes into that. But I thought sort of the base access, the very base level should just be open for everybody.
And you know what? A lot of people appreciate that, honestly, Dave, because back in the day when Bitcoin first started, people could sort of start to experiment themselves with the hardware and do the mining, but it became more and more expensive and much more exclusive. And now we see, one very concerning development potentially, and that is nations getting involved, and
Mm.
becoming, serious powerhouses when it comes to ownership and rights to mining. So you're literally breaking all this down with that open source approach, flipping these sort of ideas on their head. So it's really an open core approach. So again, it really does hark back to those ideals we first, fell in love with when it came to the cypherpunk movement. The truth of really shifting the nature of, old money to a new paradigm. And you're literally part of that, mate. So kudos to you and your team. I can't help but FOMO a little bit about this, because you don't often talk to, someone who isn't a founding member of anything like yourself. And in the spirit of decentralization, is really trying to not lead out, but by core design, it's leaderless into something that is going to extend upon the narrative that Bitcoin started, the discussion for. So let's talk about the numbers for a moment. Now, with PegNet market cap, it's roughly 10 to 11 mil at the moment, as I understand. Now, the token, as you mentioned, it doesn't have a great deal of value when we compare that to, say, fiat at 0.005 roughly. But this is very early days right now. Volume, I wanted to ask you about this, because liquidity and volume come up all the time. They are very distinct, and there's a lot of fake of both of them in this space.
Yeah, absolutely. So, I mean, it's starting from a very small base. There are 3 small exchanges that have added pegged assets so far. Off the top of my head, I believe it's ViteX, VineX, and Cytex. Almost similar, very similar spellings, VITE, VINE, and CITEX. So these are small exchanges all over the world, and they've started adding pegged assets. We see, order book depth. Like you said, there's a difference between liquidity and volume of a few Bitcoin, and daily volumes on the order of, I think I saw the other day, 15, 17 Bitcoin. So it's starting to crack, a few $100,000 of trading, which is great to see. I mean, it's coming from almost nothing, October 14th when conversions launched, to growing to that level. So I think as more exchanges add it, and I'm optimistic that more exchanges will. So if you look at something like Ravencoin, they've got 50 plus exchanges, and they took a very similar approach to using proof of work.
Right.
And that really created for them a strong community, and it was part of the inspiration for PegNet is to use that kind of model. It really created a strong community, and people just go ahead and list it, right? They don't need any permission.
I think it's going to happen very fast for you, to be honest with you, given that there's so much interest already. This is still such early days, but it did surprise me how quickly, even with these unusual or unknown exchanges. So did you consult with them, or did they contact you? What was the process? I really wanted to find out more, because I'd never heard of these exchanges. And as you alluded to, the bigger names will be coming. It's only a matter of when, I think.
Sure. Well, I think it's a good match with a lot of these DEXs, because you think about the functions of PegNet. It's sort of like having an OTC that has very deep liquidity, right? Because PegNet doesn't have a liquidity challenge. You can convert as much as you want as long as you've put that much into your wallet. So it's like putting an OTC, a decentralized OTC, next to all of these exchanges. And one of the primary challenges has been liquidity for a lot of these DEXs. So the idea that they largely reached out to us and said, hey, we want to, add pegged assets. Great. There's the GitHub.
Yeah, exactly.
Go for it, right? And so, it's been nice. And I think they're also aligned with sort of the ethics of PegNet, in that, they don't typically take custody of the user's assets. They're sort of DEXs where you can put it in your own wallet.
Exactly. I was going to mention that, because a lot of DEXs aren't really DEXs.
Right. So, and it's going to take all kinds. I don't try to criticize the centralized exchanges. I realize we do have to have bridges from that old world into this new world. So, they're welcome to participate as well. We certainly don't discriminate. And I think we'll see more of that as people have started to see the growth of the pegged assets that are flowing into the system. They say, oh, this is getting some traction. This is really, real assets are moving in here. People are converting them around. I think we've crossed more than $1 million of daily conversions inside the PegNet. And so based on that traction, I think we're getting more and more people that are reaching out and asking the developers how to get involved. One aspect that I think will be very helpful is the community. I know a couple developers are working on integrations with Ethereum that will offer an ERC20 version of the token. So then it'll effectively work in any Ethereum wallet, any Ethereum exchange. And I think that will also lower the barrier for people to participate, because you got about a 40 million plus unique Ethereum addresses. So there's a really substantial user base in that ecosystem that you want to be able to serve. And it won't be just Ethereum. I could see support for other chains. There's a lot of tokenization stuff going on in the Bitcoin Cash realm and the Stellar realm. But for PegNet, we want to be agnostic and sort of offer people the access regardless. What PegNet does is decentralized oracles. Right, it is not the biggest place for tokens or wallets or exchanges. We have to integrate and work with that existing community that's already done that.
And what's so exciting also, is that you've removed that problem or that challenge of liquidity because of the fact that you are onboarding so many assets as well. So in time, that quality of liquidity is going to increase. No question. I did want to ask you, though, to try and better understand this, because I couldn't find the data. Now, your circulating supply is just over 2 billion. If I'm wrong, please correct me. But I wasn't sure about your total supply. Is that published anywhere?
Sure. I've put out an article about, I think I titled it Predictable Peg Supply, and you'll find it on my Medium, and I can give you the link for afterwards. And effectively what it is that 10,000 per block. That's now the limit between the 5,000 for miners and the 5,000 available for arbitrageurs per block. And so that works out to, I want to say, 526 million peg per year when you add it up. And so we'll see that continue forever. So it's Ethereum style. There's not a halving schedule. And so it'll continue to increase for forever and ever, and sort of add another 500 million every year.
Right. So what about inflation? Has that built into the model as well? Because obviously people misunderstand Bitcoin even. It does have an inflation model also.
Sure.
So how is it structured for that, given it is infinite?
Sure. Well, it's very similar. I think the visual will be helpful in the article for a lot of people, because what you have is a declining percentage of inflation every year. Right, because you have a larger base. You got 2 billion now. Let's say it gets to 2.5 billion at 12 months from now. Okay, well, 500 million added over that base. You really had a 20% increase, right, over the original 2 to 2.5. Right. So, and then the next year you go from 2.5 to 3. Well, it's a little less than 30%. It's a little less than 20% now. And so by the 10th year, you're under 10%. Inflation, and then it goes down and down and down and down from there as it continues to add. So it's very similar to Bitcoin in the sense that a lot of the early Bitcoin inflation was during that first 4 years. Back when you got 50 Bitcoin per block, and before the halving schedule took it to 25, and then took it to 12.5, and next May we'll take it to 12.5, 6.25, right? So it keeps getting smaller and smaller, but half of all Bitcoin were emitted in that first 4 years. So you had a lot of inflation that first 4 years, a lot less, and now it's getting down to just a couple percent.
And Dave, that's where they use the term disinflationary, even in the context of inflation still being existent. So that's great to hear that you're working on models and building upon things that literally work, and we know that is an incentive for people to support it because of the ever reducing amount of inflation over time.
Sure.
Now, use case, Dave, that's probably one of the most important parts of any good and sound structure and model. You've built in several use cases. Do you want to just touch on them so we can understand things like payments, for example, transactions, in the real world, what you can actually do with this stuff, to facilitate global commerce, trade, and even just transactions of money?
No, I think that's a good point. Payments, I think, is going to be a large use case because people like the cheap fees, they like the finality of a blockchain, but they want to use the unit of account they're used to, right? Their local currency, that all their contracts and all their wages and all their, life is denominated in this existing currency. And so we've seen stablecoins surpass even Bitcoin for daily trading volume. I checked today, I think Tether USDT did $20 billion today in volume. Bitcoin did 17 or 18 billion. And so clearly people have a preference for that currency, even if there's some downsides around the inflationary model, which I very much understand and agree with. I wouldn't use it for a store of value, but people are using it for a means of payment.
Exactly.
Right. And I think those are kind of differentiating. And so, with that in mind, accessing South America, Asia, all these economies, I think having something where you get rid of all those fees and intermediaries involved in payments is pretty disruptive, especially as soon as we see PegNet supported in Ethereum wallet infrastructure and other chains. You're making it accessible to tens of millions of people. And a lot of these places have never had a stablecoin because you would have to have a bank account. And you can't get a bank account with rupees, right? Because there's no connection allowed between the financial system and the exchanges. And same in China, right? And so the model we can take, and the reason we can support so many fiats, is because it's using this synthetic model, because it's using this approach with oracles. So I think it's going to open up things much broader, much faster than we could have done otherwise.
I do too. I think, even in the next year, we're going to see massive uptake of this because of potential, not just for payments, but for what underpins that, and that is the commerce itself. And as you mentioned, you're opening up a 24/7 synthetic system, through the oracles and through these peg assets. It is really exciting. But underneath that, with the Euro native token, I was thinking, much like Bitcoin, you still have a semblance of store of value for that asset, even though we see, for the most part, stablecoins replicate much of what we've seen with money, with its unit of account, with its minimum exchange, and with its store of value. But specifically yours, it should technically, even though you can't comment, I will say this, it should by design appreciate in price. It's more than just, the typical stablecoin design, because it is more than that. It is a utility coin.
Yeah, Peg is very much designed to be a true utility that is native to the system. And, it couldn't effectively function without it, right? If there was no way to pay the miners or, allow the arbitrageurs to do their work, then the system wouldn't function.
Exactly.
And so, no, I certainly am not in the price prediction business.
No.
And I think what drives things is fundamentals, right? Do people see value in creating pegged assets? If they do, then we'll see more value flowing into the system. And one of the natural gateways is to take some of that peg and use it as a way to convert into the system. So yeah, it's going to be exciting to see how it develops. But
super exciting. And you know what's exciting also, Dave, is that it doesn't mean in this context it's a security. It just doesn't, because what we're learning now is that and I'm much more confident this year saying this, is that with the emergence of new technologies, especially in the context of utility tokens, for much of 2017-18, it was a huge experiment, and many of them weren't real true utilities. They were either in a pre-utility phase, or they just weren't anything but a false security. But as we see the emergence of actual new asset classes like utility tokens, there's absolutely no reason, even from the SEC, CFTC standpoint, that they can't actually have increasing value for their utility. And that's going to, I think, really showcase something new and educate people more on in the future, because to appreciate in value doesn't now always mean security. I'm really confident in that, because the function of this token you offer and many others we see emerge just doesn't behave, with expectations of dividends. It just doesn't do that. So it's going to be exciting to see more proof of utility in the future, I think.
And it's been great to see that some regulatory areas have been pretty progressive and sort of giving better definition. I give a lot of credit to Switzerland. I was just over in Liechtenstein recently. They passed their Blockchain Act, which goes into effect very soon on January 1st. The European Union passed some regulations recently that make it clear that banks can hold and custody tokens on behalf of users. So it's really great to see sort of those pieces being put in place. And so I think some of those more progressive jurisdictions are likely to be where a lot of this technology moves. It's not necessarily taken for granted that it'll end up in California. If you look at the top blockchains in the world, most of them are based outside the US. Those
Absolutely,
that have
mate.
foundation are primarily based in Switzerland or
Or
Singapore
Singapore.
or
Yeah.
Hong Kong. Exactly.
Yeah, and what's interesting, which we can talk about this now, it's a perfect segue. There does seem to be a bit of a backlash from Libra in the sense that many of the governments around the world are quite fearful of the potential, of enterprise money, let's call it that, or enterprise, assets. Now, you're doing something very different because you're melding the worlds, the old world with the new, and perhaps are more palatable in that sense and aren't scaring, the powers that be as much. But certainly they are talking a lot about stablecoins now. Have you noticed some of the even in Europe, for example, they're now discussing what to do, with this big question mark around stablecoins?
Yeah, well, I mean, I think what we're likely to see is central banks issuing their own digital currencies. China has been working on that for years and looks like that'll become a reality. Next year, I wouldn't be surprised if the European Central Bank or the UK did something similar. But I think one of the things that governments didn't like about Libra was the mixed basket approach. It effectively put the Libra Association in charge of monetary policy, right?
Mm.
How much do we want of each asset in this basket? And so, at least the sort of rumors that I've heard is they're moving more towards picking a currency for each country's users, right? So you'd have a Libra dollar and a Libra euro and whatever, and then you still have effectively nation states in charge of monetary policy, and it
What does it
becomes more
really
of
change that
a
much?
yeah, exactly. It just becomes a payment rail,
Exactly.
right? And so I don't think it solves some of the monetary problems, and I think there ought to be a separation between money and state is the long-term view here. But it'll be interesting to see how it evolves. It's definitely gotten a long way. If you had told me in 2012 that by 2020, major nation states and all of these companies and everybody would be highly involved in blockchain, I would say it was wildly optimistic. But here we are.
Well, we can thank people like Mark Zuckerberg for raising the profile, perhaps by raising the question even of stablecoins themselves, because it did do actually a lot in terms of spreading the word of this technology. Now,
Sure.
what's interesting too with yours is that because you do also open up the potential of working with fiat in this PEG sense, that I would argue would also be something that many of these governments would be much more willing to work with. And I ask you this because many argue that you do need to have some of that top-down support as as an organic, decentralized, open source technology, builds itself. You don't want it shut down, even though it can't be. But you don't want any of those social narratives or those political narratives trying to stifle what can be a very productive technology.
And it's worth pointing out that synthetic assets have been around for a very long time. And this is nothing new, and is something that has existed for decades, and are traded at the level of billions or trillions of dollars. And so, I think that is helpful. It's also helpful that there's no central party, right? You're not sending these assets to a custodian. There's no central party issuing these stable coins. The user has control of their funds throughout the entire process. And I think that's pretty critical because most of the regulations really focus on who is the intermediary, who is the person standing in the middle, because then a user's money is at risk due to the actions of some other actor. Right, and so it becomes a natural place that you're going to have conflict and conflict resolution needs. But in a system where there is no intermediary, you really sort of simplify a lot of those things. You're not sending money to somebody else. You're not trusting somebody else to hold it. There's these decentralized miners all over the world. There's no central operators of the system. And so I think that design is important for not only cybersecurity reasons, but also because it's sort of the cleanest system that honestly regulators should want, right, is for users to have power over their own funds.
Exactly. We're talking about a whole new financial sort of paradigm with autonomy built in and transparency as well, as you mentioned, because a lot of people initially thought, falsely presumed perhaps from lack of understanding of blockchain, that it was somehow anonymous.
Yeah.
That it was all about trying to thwart or circumvent the powers that be, but it actually could never really do that because of its beautiful transparency. The fact that there was always that traceability built into it. But then there was the question of privacy, which is very valid. That moves towards the rights of us without trying to move into realms of secrecy. But moving back to you, and in the future, even though you probably aren't involved in direct discussions and can't be, do you anticipate that you'll see an influx in more exchanges listing you because of your own success and the proof already empirically in the near future? Obviously, it's a bit of a FOMO question, yes, but it has to be asked.
People reach out. I watch the Discord and things very closely, and I can see when exchanges are popping in there and asking developers questions. So that's kind of good hints that people are looking at it, at least evaluating, adding pegged assets. I'd love to see more of that. And hopefully things like this interview and the AMAs are sort of spreading knowledge, and that the exchanges see real utility in giving their users access to pegged assets. Certainly something that hasn't been possible before, and hopefully will drive people's interest and usage of their exchanges in order to get access to these type of tools. But no, I absolutely want to spread the word, and exchanges have their own motivations, and they tend to want good projects, right, where people really see the use and are excited about them. They're crypto enthusiasts too. They're miners too, right? And so they're part of this community, and I think exchanges that sort of get this vision will be excited to be involved. And it's not just about exchanges, it's about OTCs, it's about wallets, it's about all of the tools that you need to integrate to make a project successful. And so with mining launched, conversions launched, and arbitrage launched, I'm really focusing in on how do we recruit great developers to work in and join this community. I think Ethereum did such a great job of that early on, was rewarding and encouraging developers. And so I just released an article on crypto tithing, the idea of giving on a regular basis to the developers that do all this hard work to build out the ecosystem, so that they're not just hired by companies and sort of have alternative motives, but they can sort of purely work on the open source. I think is great. So I've been donating peg to developers that I see developing great stuff in the ecosystem, and just encouraging everybody else to join in that. So there's a Google Sheet. It has the addresses of the projects that people are working on. And so if people are passionate about this, I hope they'll support them. And so far, so good.
And mate, you're very modest, because I looked into this, and this is your own money you're also donating to this cause, not just, because there's no foundation, there's no actual source of funds that come from anywhere. This is from your own pocket, and you really do stand by this as proof. You're literally giving money to support, or giving, valuable assets to those that you most value, and they are the developers, to build out more of the potential of this. So really, congratulations for standing by what you say, and proving with your actions that you really believe in the future of this. Now, what about compliance and regulation? Just to touch on that very briefly, are you concerned at all in any jurisdiction right now? Is there any pressure from the top to, fix things, redress things, or is it difficult in some areas of the world to work in?
I don't know. I mean, I haven't heard anything from regulators. I don't know who they would send a letter to. The miners are sort of all over the world, and the system runs on top of FACTOM, which itself is decentralized. But I think what you want to do is encourage good actors. That's what really counts. people don't want to see bad actors, and so I'm doing everything I can to do to encourage sort of good actors to join the community, discourage any bad actors to not really welcome in the community. We want people that are here to build this technology and to decentralize finance, right? It goes back to that DeFi ethic. And so, I'm sure there will be issues that come up, and what I think is important is how the community responds to those and does everything it can to, reward honest actors in the system. And that's sort of, I think, the important thing. And we've seen that with cryptocurrency in general. People want to encourage the best, and nobody wants to encourage, sort of bad use cases for this stuff. And so, I think a lot of it's on the intermediary does become the exchange, right? And they're still doing KYC and AML and all these activities. And so I think it doesn't really change that dynamic, right? Nobody's, able to get into this ecosystem that hasn't sort of gone through some of that. And so, I think it's partly a question of community culture.
I agree, and really the exchange is just the gateway as well for something more, and that is what you actually offer through your native asset and all of the ecosystem you're building with PegNet. Community has never been more important than this year. With all of the drama, with all of the tribalism, with all the things we see. We don't see enough of that positive sort of rationale anymore, or positive proof something is more than just our own speculative bets. And what's really great about your model is that you do have most definitely that utility token driving all this, but you also have a good cause, because there's something there that we can use essentially to develop in a more decentralized fashion, literally potentially lead out decentralized monetary paradigm. Really, you really could be doing this, and because there is no leader, this is why I'm not used to, having discussions with no CEO. Even on my YouTube, I have a section that I can't put you in, which is where I have all the interviews with CEOs. So it's a really big deal that this is happening. And as such, I feel so privileged to be able to talk to someone who is just another member. Despite the serious role you do have, you're just another person in the mix of PegNet, and hopefully your community feel that. So how is the sentiment going in Discord, for example, and in the broader community of PegNet as you build forward?
It seems pretty positive. I mean, people have been encouraged by the fast-moving nature, because there wasn't a 2 or 3 year slog to sort of rebuild all the infrastructure, that you could just build the application itself and get it out there. People have had concerns about, well, how is this going to work, or how that is going to work, but they've been resolved very quickly because things have shipped so fast. And so we can sort of take it out of the theoretical and put it back into, well, let's give it a try and see what happens, right? The whole CPU mining algorithm, will, the algorithms stand up, oh, we're turning on conversions. Is there enough value in the system yet to make sure it works, and enough reward for the miners to secure it with arbitrage, how's the floating peg going to work? Are enough exchanges added it yet? And with each of those milestones, we've been, just seeing people sort of rally together and said, well, let's give it a try. And, whatever happens, we're going to adapt and just move quickly. So I really like that ethic. I think we just crossed first 1,000 people in the Discord. There's a growing community on Telegram and WeChat and a lot of the other channels. So it's a pretty positive sentiment. We're pretty light-handed on sort of, discussion is going to be what it is. You can't really control a lot of these channels. People have set up channels. I don't even know, who's in, running the QQ channel.
Again, you're so modest though, Dave, because the reality is that you are going to grow rapidly. That's the truth. And it's because, you want this to be quite from the outset entirely decentralized, and that's going to attract a lot of people in your direction. I think that you haven't focused on marketing, almost nil. And I think that's why people just don't know your name enough. But very quickly, I think when the light bulb switches, for a lot of people, it's just going to have this domino effect, and it will be fast. Once people really understand the gravity of what you're doing and the value of it. But I also wanted to discuss a little bit more about the devs themselves in terms of the repos. You know, how I had a look. I went into GitHub today, and I was just looking at how active it does seem to be. Very active. There were posts I saw, repos that were within that day. Is that increasing over time? You know, this kind of this hive of activity that we expect from a GitHub.
Yeah, I mean, it's certainly grown a lot in the last 3 months. Paul Snow sort of wrote some of the first ideas and gave some of the first speeches last year about the idea for PegNet, and then the community sort of just ran with it, coded it up. Most of the code is not written by Paul. It's been written by community members all over the world. I know a lot of them are in Europe, some here in North America, some in Asia. And so, yeah, I think where we've seen the real explosion is not just in the core GitHub of PegNet itself, PegNet-D, but all of the surrounding areas. So somebody coded up the first graphical wallet, and somebody coded up for the first Chrome extension that lets you sort of MetaMask type capabilities for Factom and PegNet, and released that a few days ago. And somebody built a website for miners and a website for all the tech stuff. And ever since I sort of put out that PegNet improvement proposal, people have started coming up with all these ideas and adding to them to lists. So the list went from like 3 or 4 projects to more than a dozen projects now that people are building just on their own initiative. So I think that's the real measure of how fast things are growing, is sort of what are all the supporting infrastructures that are being built to deliver on the promise.
Right, and that's where all of your years of experience do come in, and your team. So while you don't have a team and while you're not leading anything, your expertise has been invaluable here in building out this infrastructure for a decentralized technology for everyone. In that sense, I also wanted to better understand programming languages, the number of those that are now accessible, because I wrote down a few and it was quite a few. I was surprised. So are you opening up this as much as you can to all kinds of different devs with different experience perhaps, or different backgrounds? And are you also looking at other things like wallets, to better support people as we start to engage more?
Absolutely. Some of the core Factom software is written in Golang. There's implementations around Python. A lot of enterprise software is still written in Java and other languages. And so I think the more implementations that you have, the more robust the software is in general. So we're trying to encourage people to implement it any way they want and with as many languages that they want to support. And like you said, there's all these other libraries and wallets that need to support the infrastructure to really make it accessible. So being able to also, a lot coming, and being able to use the existing Factom software is a nice way of bootstrapping as well. You got the My Factom wallet, you've got the Factom Enterprise wallet to store these keys securely, cold storage if Papermill, which is the cold storage solution for Factom. And none of those send PegNet assets yet, but they're a great way of key management, because all of the PegNet tokens are using Factom addresses, just like any ERC20 would be on an Ethereum address. And so having that bootstrap, and then people adding this extension and this GUI wallet and others, sort of given it a fast start to grow on that side.
Yeah, it's certainly been an advantage to open up the tool suite and the toolbox of Factom for this PegNet architecture and what it can do, because obviously a lot of that was very successful in its own right, and it had been well and truly nutted out through your team. Now the roadmap is something I found really interesting, because it's very detailed without a lot of information, in the sense that you have all of these moons, which I thought I had to go on Google to make sure I was right, but you have Titan and Callisto and Nebula and many others coming, but clearly there are projects attached to those that we don't know about. You do, some of them, but I heard mention of things like the prospects of loans and leverage trading, and there's a lot of things you're considering. There's a lot happening for you.
Yeah, and a lot of them I don't even know what people are building.
Right, the beauty of decentralization.
Yeah, these are all community proposals. I think one of the most mature is a lot of the developers have been thinking through how do you do shorts, how do you do longs
Mm.
on PegNet, and so there's a whole white paper written up about how to do that. I think that's Project Darkstar. There's a couple of different names, but yeah, I mean, people have all these ideas. They may be implemented, they may not be implemented. It's sort of, you have to figure out the technical challenges first, and then you have to have somebody that actually goes and writes the code, and
Mm.
then you have to see that the mining community is willing to adopt those updates and they feel like it's secure and in the best interest of the network. So you have these different steps, but no, it's really cool to sort of opened up all this new space for people to imagine what could be once you have decentralized stablecoins. Oh, now we can do shorts. Now we can do all
Exactly.
these financial things.
And there's so many things, you know, as you mentioned, that people are thinking up. And I just found it really interesting looking at your roadmap that already there's, you know, significant scope for more. And even in the light, for example, with shorts and longs, we see now that some of those smaller alts, you know, there's some listed them perhaps when they shouldn't have because there wasn't enough liquidity. Obviously, that's going to be a factor in the future as well. What I also, you know, love is that, you know, we're not going to see influencer ref links with you. It's just not going to happen because there's no one to pay, no one to organize payments of anything, which I really respect because I'm not a huge fan. Many people know of those ref links, you know, for big bucks to those because we know that there's risk involved as well in that respect.
Right. Exactly. No, I mean, sort of miners can take their own initiative, and if they want to hire marketing people and do stuff, you know, it's out of their own pocket. So,
Yep.
you know, that has a nice way of sort of filtering out a lot of the fluff because people don't want to waste their money. They want to be very smart about how they use their dollars.
Right, and it also sets for, you know, once again, a more equitable playing field as well,
Mhm.
because you don't see, you know, a significant capital going to certain parties, whether they be the ones, you know, educating or speaking about things, or whether they have the charisma.
Sure.
It's much more about the mining. It's much about the function, the form, and you're getting the business of getting these things, you know, up and running. Now, one thing I did want to ask you about was your references of price instability. And also the question of whether or not better stability has to happen as more off ramps, you know, are available, and also that improving liquidity. So, do you think all of these things are going to merge or improve in time, whereby more liquidity brings better price stability, obviously with stable coins, and then, you know, and more access to on and off ramps as well?
Well, I mean, certainly the off ramps is very dependent on those exchanges and other players we talked
Mm.
about. As far as the prices, the arbitrage function between the exchanges and the PegNet wallet is an important step. And there's some great visuals actually for this in the predictable peg supply article that show, you know, if a price is too high on an exchange, then arbitrageurs are incentivized to, you know, go ahead and deposit more of those pegged assets and fill up that order book until people are only paying the correct price. Or if the price is too low on an exchange, hey, take those cheap assets, move them onto the PegNet, get paid full price to convert into any other pegged asset, and they effectively sort of make that spread. And so that's the very simple and elegant arbitrage mechanism that's been designed to sort of keep everything at that equilibrium. And so we'll see how it goes. That arbitrage function has just really started on December 9th. And we'll see. I mean, so far the prices have started to narrow. They used to be, you know, 20 cents off, and now they're a couple cents off. And we see that even with huge projects like Tether. I was checking today, and the price is
Mm-hmm.
101. You know, whereas the bear move is a lot of influx of value demanding Tether, and it moves that price up. So I don't think that's going to go away. But what you want is tight spreads. And you want the reference price to be very close to the exchange price, within a percent or two.
Right, and like you said, Dave, it's like December 9th was the start of this, so, you know, a long way. There's a long trajectory, you know,
Then a whole
forward.
6 days. That's
Yeah, you know, and I'm
right.
being a bit hard on you. So, you know, obviously there's immense, you know, potential with you. And Dave, obviously it's been a massive privilege to be able to speak with you. You know a lot more than you're giving away in terms of all your experience, all that you know, all the people that you've worked with, including Vitalik. I mean, you're the real deal, mate. And it's been a privilege to learn more about PegNet. I can see this as one that I'm just going to say it. I don't normally do this, but this is one that is going to really make waves in the space. And again, not to FOMO, but this is going to be something that a lot of people are going to pay attention to, I hope, simply because of the true spirit of decentralization is being built into this technology. And you're not leading this, but you're trying to educate about what this can actually do. So, mate, is there anything that I've missed that you want to let people know right now that are these core features and the core benefits of something like PegNet, so we can all really understand what's coming?
You sort of have to reimagine the world and your own portfolio with a tool where there aren't any fees, a tenth of a penny, but there are no percentage fees. There's no limits on liquidity. There's no slippage, right? You're not moving the price when you do a conversion within your own wallet. And so that's something that hasn't been around before. And people are going to sort of have to reimagine how they do arbitrage and how they plan their portfolio or think about these tools. I'd say the biggest thing is jump right in, right? There's never been a better time to get involved in crypto. And, some people think that they're late because it started in 2009. No, this is still so early in the there are 8 billion, we're close to 8 billion humans on the face of the earth, and a few tens of millions of them have a crypto wallet. We have got a long, long way to go. There's another 10, 20 years ahead of us to bring this technology to the masses, to make it ubiquitous and to really change people's lives with it. So I'd encourage people jump into the Discord, pegnet.org/chat, give you a direct link to the Discord, and to jump right in, see where you can contribute. And this is one of those things where you don't need anybody's permission. If you want to tweet about it, if you want to write about it, if you want to mine it, go for it, I think you'll see an enormous personal benefit by just getting your feet wet and getting involved in one of these DeFi projects. Because I think it's really the trend that's going to lead us into 2020, right? I saw, peer-to-peer payments, really be that use case in 2013. I saw that with token sales in 2017 is where what led to all of the innovation going on. And now we have a new wave where it's about empowering individuals to have control over their own finances. And so I think it's really cool and something that we'll see grow a lot in 2020.
Exactly, mate. I imagine even my children will be looking into, engaging this at some stage, because we have things like equitable access through CPUs. We have the layers, you mentioned with FACTOM, with its very specialized protocol. We have the agnostic nature with Ethereum, Bitcoin, and other, protocols that certainly the ability to interact with them, bring out the best of what they do through your own technological value. And then we see, the narrative of stablecoins, now peg stablecoins, those synthetic assets that are really changing the game 24/7, available to many people in the world who typically would be completely unbanked and couldn't access these things. And then we see the potential in the future for what we don't know, and that is things like commerce, enterprise, how this is going to play out because of the very genuine scope of this, with all of the assets that now exist from fiat, commodities, and the cryptocurrencies. This is just the beginning for you, mate. I wish you all the very best. I'm going to certainly be looking more into, all that you stand for and what you continue to do. And hopefully we can catch up for more concise discussions about different areas of PegNet, so people can be more educated about the value as you bring forth this decentralized tech to the world.
Awesome. Thanks, Brad. Appreciate it. Thanks, everybody.
You're very welcome. Take care, mate.